All right, let's get started. So, thank you guys for hopping on this month's REI Tax Huddle. And if you guys are watching this on a later date because you are traveling for Thanksgiving, I really appreciate you guys hopping on. So, let's get started. This month's tax huddle is called Snow's Falling, Tax Time is Calling. So, let's start reconciling. What does this all mean? This means that now is the time to get your books in order. Okay, we're going to be talking about why is bookkeeping important, why is bookkeeping the fundamentals for proper tax filing and also tax planning? All right. And you really cannot do accurate tax filings or really maximizing your tax savings without good tax planning. So that's what we're going to be talking about today. Hopefully you guys enjoyed this presentation. If you guys have any questions, feel free to interrupt me at any time. We also have a Q&A at the end, but you guys can ask me questions as they come to mind. Okay, so let's get started. All right, so who am I? Why should you guys listen to me? So my name is Jason Malamute. I'm a CPA. I'm also a certified tax coach. What does that mean? That means that I specialize in creating tax plans and tax strategies for clients. I've been in the tax and accounting world since 2013. I've been a CPA since 2015. I've been working with real estate folks ever since the beginning of my career. And what separates me from other accountants and CPAs say that they specialize in real estate is that I am a real estate investor myself. I started investing in single family homes back in 2018. I was investing out of state, Indianapolis, Indiana. From there, I transitioned into multi-family properties. I'm a general partner on two multi-family deals. One is a 106 unit deal, and the other one is a 236 unit deal. So even when I had my single family properties, and even when now that we have our multi-family properties, I was actually either doing my own accounting and bookkeeping for my own properties, or I was overseeing and helping with the bookkeeping for multi-family properties, even though I was not allowed to actually be engaged in doing the bookkeeping for the multi-family deals I was then a partner on because I'd be a conflict of interest. But I was still the one who was making sure that our accountant who was doing the bookkeeping for them was doing it correctly. So let's move on to the next slide. Okay, so why is accounting important? Why does it matter? First of all, clear numbers help you make better decisions, right? So if your books are not accurate, or even worse, if they are non-existent, you are going to be making key decisions on numbers that do not reflect the actual standing of your properties or your business. So that's why you need to have solid numbers so that you can be confident that you are basing your decisions on solid facts. Okay. So number two is that if you are trying to get a loan for either a refinance or you're trying to get a loan for a new property, a lot of times your lenders are going to be looking at your financial statement. So you need to have them readily available. And also, whenever you submit a financial statement to a lender, a lot of times they are going to make you sign off, confirming that those financial statements are accurate. Okay. Also, it avoids penalties and it keeps you compliant. That's more on the tax side, right? So if you don't have your bookkeeping up to date and you have a business tax return, or even if you file your rental properties on the 1040, and if you need to catch up with your accounting because you've been neglecting your bookkeeping for the whole year, that can cause a bottleneck for you, and sometimes it can cause you to file your taxes late. And if you file your taxes late, you're accumulating interest and penalties every single day that you don't file it. So that's why it's important to be up to date with your bookkeeping. Also, it shows tax savings opportunities, right? So a lot of us real estate investors, we're always looking at tax strategies, whether it's cost segregation and bonus depreciation. Also, if you have a business outside of real estate, there's a lot of things that you need to be aware of, whether it's a 179 deduction, or if you have a net operating loss, there's limitations on how much of that net operating loss that you're carrying forward to the future year, how much of that can you offset your profits from future years. So you will not be able to accurately have those numbers if you're not keeping up to date with your bookkeeping, if your bookkeeping is not accurate. So that's why it really matters to be on top of your bookkeeping. Okay, so admittedly, you guys, it's something that I see very often is that I see people who are in real estate, they try to do their own bookkeeping, right? They try to save money by either doing their own bookkeeping or even worse, they say that I'm going to try and save money on my bookkeeping by hiring somebody in the Philippines or in Mexico or in India to do my bookkeeping. And something I always tell them is that if you are not a bookkeeper yourself, if you're not a CPA, how do you know that what the bookkeeper that you hired in the Philippines is doing your accounting correctly? And the answer is you wouldn't know because you don't know what you don't know, right? And also, the challenge is that if you start your bookkeeping incorrectly, what happens is that we need to clean up your books. Whether you come to us or you go to another accountant, they're going to have to clean your books. And that brings additional costs because what happens is that we need to go back from the beginning. Then we need to check every single month to make sure that it was properly reconciled and accounted for. And if not, then we need to make adjustments. We need to make some journal entries. We need to reconcile accounts. We need to make sure that all the bank statements, credit card statements, and loan statements matches the ending balances on the bank account statement or the loan statement or the credit card amounts. So you're just creating more work for your tax partners, or you're also creating additional expenses for yourself. All right. Versus if you are working with a professional bookkeeper or CPA, you can be confident that your financials are accurate and also up to date, assuming that you are working with a reputable professional. Also, since you are going to be having those financials readily available, you can then start making better business decisions on your operations based on that financials. Remember, you guys, a good bookkeeper, a good accountant, they are not just going to just reconcile your books, but they're also going to take the time to educate you and tell you what does the numbers mean, what does the financials mean, how can you take what the financials are saying, and how can you make the right decisions to make your business more profitable month after month. Right? And also, when you have a professional bookkeeper, they are going to do your financials timely. So if you have a lender who you're working with, who you're trying to get a loan from, and they ask for your financials, you can be assured that you will have the financials ready for them. Also, something that's not on this slide is that if you guys are raising capital from outside investors, a lot of those investors are going to want to see your financials. They're going to want to see how your properties are doing. So by you having a professional work on your bookkeeping, you can help keep your investors happy by you being more transparent about your investments, and then that can lead to them putting more capital in your future deals. Okay, so that's on. So this is something that I see from newer investors is that they always ask me, do I really need to get a accounting software like QuickBooks, or can I just have my bookkeeping on a Excel or Google Sheets? And I always push for QuickBooks with a caveat, right? Because QuickBooks can be very expensive if you don't know what you're doing, because there's QuickBooks packages that's as cheap as $10 a month, and I've seen QuickBooks packages that can go up to $115, $120 per month. So you want to make sure that you are selecting the correct QuickBooks software, because on one hand, you want to make sure that you have all the features that you need. What do I mean by this? For example, if you are a house flipper, or let's say you have multiple properties under your name, then you're going to want a QuickBooks that can handle all those different properties and projects in one QuickBooks. Because what you don't want to do is you don't want to buy separate QuickBooks for all your properties or all your businesses if you don't have to, because that can add up quickly, right? But at the same time, you don't want to get the top level QuickBooks if you don't need it, because then you're just throwing money away for a QuickBooks software that you're not even using all the features there. So that's why it's very important for you to work with a bookkeeper or an accountant that knows your business very closely so that they can select the correct QuickBooks package for you. So very quickly here, why is QuickBooks superior to manually entering your transactions on Excel? First of all, Excel is a manual entry. So that means that you are subject to human error, you're subject to typos, you're subject to forgetting to include transactions, you're subject to accidentally entering a transaction twice. You are able to avoid this in QuickBooks because QuickBooks allows you to reconcile your accounts. And when you reconcile your accounts, if the ending balance does not close out, then you know that you did something wrong. Whether it's you forgot to enter a transaction, or you might have accidentally put in a duplicate, or you might have transcribed something incorrectly. So that's why reconciliation is very important. Also, QuickBooks just makes everybody's life so much easier. So there's a feature in QuickBooks where you can connect your QuickBooks to your online banking. So all your transactions automatically flows into QuickBooks so that you don't have to manually input them into QuickBooks. You just need to make sure that all of the transactions are categorized correctly before you accept them into QuickBooks. Okay, so just in case I have people here who are anti-QuickBooks, you don't want to use QuickBooks. There's also other accounting softwares out there as well. Like for example, Xero, that's spelled Xero. That's another popular one. I just like to just use QuickBooks for my examples because they are the most well-known accounting software, and in my personal opinion, I think they are the most user-friendly accounting software. Okay, so what do actual clean books look like? We've been talking about keeping your books clean. Well, what does that mean exactly? So that means that there's a couple of rules of thumbs that you can use to tell if your books are clean or not. So, for example, if you received a 1099, well, assuming that all of your vendors issued you a 1099, well, the gross income for the business should match the 1099s. This is especially very important when you have a rental property. If you are working with a property management company, most of the time, the property management company will issue you a 1099 for the year. Whatever is on the 1099 for the rent collected should match what's on your gross rental revenue for the year. Also, your expenses should match as well. So, for example, if you have a business, whether it's an S corp or a C corp, let's say you pay yourself a salary and then you pay your employees salaries as well. So you know that you did it correctly if your W-2 and W-3 matches your officer compensation on your profit and loss statement, and also your salaries and wages for your employees. Also, you need to look at your payroll report. For example, on the federal side, you will be getting a Form 941, a Form 940, and then if you're in California, you have payroll reports like DE9 and DE9C. Those reports are going to tell you how much payroll taxes you paid every year, and then also how much payroll tax liabilities did you have by the end of the year. So you should be comparing those with the payroll tax accounts on your profit and loss, and also you should be looking at your payroll tax liability that's on your balance sheet, making sure that those amounts match with what's on the payroll tax reports. Okay. Other key items that you should be looking for that's super easy is looking at your bank statement. Okay. Look at the bank statement cash balance for the end of every month, especially for December 31st. Make sure that those cash balance amounts on the bank statement matches the balance on the balance sheet for cash. If that's off, then that should be a red flag to you that something could be wrong with the accounting and the bookkeeping. Also, if you have any loans, whether it's a private business loan or a mortgage loan or a credit card balance, all those loan amounts should be reflected on the liability section of the balance sheet. So whatever on the balance sheet should match your monthly statements that you get from your lender. Okay? Because remember, what is the purpose of a balance sheet? The balance sheet is supposed to show how is your business doing, what's its health for a certain snapshot month, whether it's at the end of the month or end of the quarter or end of the year, right? Other thing that you should be looking at is if you've been lending money to people, right? Like for example, if you are a hard money lender, one important form to look at is a 1099 interest. Okay, make sure that whatever is on the 1099 interest matches what's on your profit and loss. Also, when it comes to my real estate investor clients, every year, if you have a loan on a property, you should be getting a 1098, which shows how much mortgage interest did you pay on your property. And one of the common mistakes that I see from real estate investors is that they try to deduct their entire mortgage payments from their profit and loss, and that's wrong because you can only deduct the mortgage interest part. You cannot deduct the entire mortgage payment. Okay, so let's move on to the next slide. Okay, most missed deductions that I've seen for people who were trying to do bookkeeping themselves or working with a bookkeeper or an accountant that did not know what they're doing. Number one is repairs for a rental property. Very funny stories. Like I have clients who own properties that were built in 1960s, 1970s, 1950s, and I look at their tax returns that their previous accountant filed for them, and I see $0 for repairs. And then I talked to that client, and I told the client, "Hey, client, I've owned properties like this before, and I could tell you that a 1960s, 1950s, 1970s properties, I know that there's always repairs going on in this property. It seems like every single month, but how come your Schedule E says that you had zero repairs back in 2024? I mean, is that correct?" And then the client was saying, "Actually, no, like we made a lot in repairs in 2024, but I guess my previous accountant must have missed that." So that's one big thing. Also capital improvements, right? If you did anything to make the property bigger or last longer or better, those are capital improvements. And now, for the most part, you cannot expense those for the current year. You need to capitalize that, meaning that you need to spread those out through several years. What is an example of a capital improvement? If let's say you replace a roof, right? If you replace a roof, you cannot just claim that roof expense in year one, right? Not unless you do like a bonus depreciation, or if let's say you buy an equipment, then yeah, you can do a 179 deduction. But let's just stop. Normally speaking, you cannot do those. You cannot expense the entire amount for a capital improvement unless you elect to do to do a special tax, tax tax code benefit, whether it's something like a 179 deduction or a bonus depreciation, right? Versus a repair. A repair is something that you could expense in the current year, right? Like going back to my example of you replacing your roof, right? So replacing your roof is a capital improvement, but you fixing your roof is a repair, and fixing your roof is something that you can expense right away. Another thing that I've seen people miss on their bookkeeping is property taxes. So believe it or not, people miss out on their property tax deduction, and a lot of the reason why is that they miss out on their property tax deductions is because they think that they cannot deduct it since they paid for it with a personal credit card, and that is incorrect. Even if you paid for a rental property tax using your personal credit card, you could still deduct that under taxes, right? Next thing is insurance premiums. I've seen people forget about insurance premiums. Utilities paid by the landlord. You can't forget about that. Here's a big one. Depreciation. You guys, you need to record depreciation on your books in your taxes, right? Depreciation is not optional. You need to record depreciation on the tax return. And just a quick side note, if you are one of those people who forgot to include depreciation in your guys' taxes, you don't need to amend your tax return just because you forgot the depreciation. We can just catch up your depreciation in a future year by us completing a special form called Form 3115. But whenever you do a Form 3115, that's going to require special knowledge. So that's going to cost you a little bit more money. If your accountant needs to file that form, so might as well just do it correctly from the start, so that you don't need to do a catch-up depreciation in the future. Also, I mentioned this before, but business expenses that you pay with your personal credit card and bank accounts, those are still deductible, and of course, mortgage interest also. All right, moving on. Okay, so how to reconcile books? We've already talked about this previously, so we'll go quickly through this. You will gather bank statements, credit card statements, make sure that the beginning and ending balances match. Enter and categorize all transactions. That's what I was talking to you guys about a few minutes ago when you automatically sync your transactions into QuickBooks, you need to make sure that they are categorized correctly before you enter them into QuickBooks, right? The next thing is you need to check each transaction, make sure that everything matches. If there's anything missing or if there's a duplicate transaction, you need to catch those. Once everything balances on your reconciliation page, then that's when you can press reconcile and that everything should match, right? And then from there, if there's any journal entries that you need to enter, that's when you do that. And then lastly, you will do the same thing when it comes to credit cards and loan statements. You need to reconcile those as well. Okay. Moving on. So how do clean books empower better tax planning? We've talked about this in the beginning. It gives you more accurate and up-to-date numbers where you can make more solid decisions. And a lot of tax planning comes down to timing. So that's why having your books ready at all times is crucial when it comes to tax planning. Uh, it also lets your tax professional project you with a better tax bill correctly, especially if you have a LLC or if you are a sole proprietorship. Your QuickBooks should give your tax professional a solid idea about how much you could potentially be owing at a given year, right? It also gives you opportunity to look into things like bonus depreciation, retirement contributions, cost segregation, looking at different legal entities. Something I did not talk about before, but something you can look into as well is profit sharing if you have a corporation. But all that starts with solid bookkeeping. Right. Um, So what should your bookkeeper should actually be doing? It just goes beyond just reconciling your books, right? But it should also be keeping your books clean, making sure that there are no improper or incorrect transactions going in. That they should be monitoring your income and expenses. And most importantly, they should be communicating with you, right? Communicating with you, telling you, hey, here are the trends that I'm seeing on your financials. Also, that's why I'm not a fan of people who have separate bookkeepers from tax professionals. Because when you have separate bookkeepers from tax professionals, what happens is that your bookkeeper might treat a particular transaction differently from your CPA or your accountant, and then there's a conflict in advice. So I mean, it's better if you just have the same bookkeeper and the same tax professional, so there's no conflicting advice, and that you are getting tax strategy from the same person who is looking at your books every single day, right? And it's also important for you to be working with somebody who is proactive because one of the most common complaints I'm hearing from new clients is that they are working with a accountant who only talks to them once per year, right? They only talk to them once per year, and that there's no proactive tax planning, there's no tax strategy. So I would say that before you sign up with a CPA or an accountant, it's important that you really screen out for people who are not only going to be proactive, but are good communicators. Being good communication is important when it comes to working with clients and understanding what is the client's goals and how can we help them hit those goals through tax planning. So moving on. Okay, so time time on the checklist for year end readiness. We already touched on this. So again, keeping your books accurate and up to date, reconciling all their bank accounts and credit cards of statements and accounts, making sure that your income matches your 1099, same thing with the payroll reports, categorizing all the expenses correctly. Those are things that we talked about before, but I just wanted to give you guys a reminder of how important those things are when it comes to proper bookkeeping. Okay. So right now, we have a special offer just in case you don't want to do the bookkeeping yourself. If you are busy actually running the business, and you don't want to spread yourself thin. So here is our offer, which will get your books cleaned up from January to December 2025 for $2,000. That covers one bank account and one business credit card. If you have additional cards and additional bank accounts, it's $250 per additional account. We guarantee that we'll finish it within 14 days. If you don't finish it within 14 days, we will give you 1 month free of accounting in 2026. There's a lot of great bonuses here. You will get two free 1099 preparation. You will get four quarterly meetings with our team showing you guys what do the numbers mean every month, okay? And then us giving you feedback every quarter about what are some tangible things that you can do every quarter to make your business more and more profitable. And also, we are going to be looking back at our action steps for the previous quarter, and we're going to be holding you accountable. Did you actually take our advice? Are you actually moving your business towards more profitability? So those are the things that you are going to be getting from this bookkeeping offer that we get. Also, another cool thing about this offer is that as long as you upload all of the necessary documents that we ask from you guys within 72 hours, we will give you a $1,000 discount that you can apply towards your 2026 bookkeeping or accounting. So if you do the math, that's about $83.33 of discount um for your bookkeeping costs every single month. Okay, so this offer ends on December 15th, and we only have 8 more spots left until this offer is completely gone forever. Okay, so does anybody have any questions? I will give you guys 10 seconds. If nobody raises their hands, we'll move on. All right, 10, 9, 8, 7, 6. All right.
And Jason, one real quick. I know I really appreciate this discussion. This has been Clark and Carmen. Clark, we're just getting to know you a little bit, and really appreciate you having this webinar for us and all the participants. And we're just kind of jumping into kind of organizing our real estate portfolio, and this is really helpful. Looking for ideas on how to do it better. So, QuickBooks over Excel, for me, that was really an important segment of your presentation. And is there choosing the right subscription? You touched upon that. We have, we're setting up our entities right now and are looking to have several different LLCs for each of our real estate investments, and wondering if you can give us any insight, because I haven't looked into QuickBooks that much. What your recommendation would be if we were to for a structure with multiple rentals and management or parent LLCs, etc.
No question. Even though you guys have multiple LLCs, are you guys the only owners of all those LLCs, or do you guys also have partners on those LLCs?
Yeah, it's just us.
Okay, so what happens is that if it's just you guys, and I'm assuming you guys are married, right? You guys
That's
are
right.
married, partner, joint. So what happens there is that all of those LLCs is considered disregarded LLCs, which is just a fancy word that means that you can file all those tax returns on your personal 1040 without you needing to file a separate partnership return. So then therefore you could just use just one QuickBooks
Okay.
for all of those properties. And what you would do is you would use like a QuickBooks Online Plus is the one that I would personally recommend to you guys. And what would happen is that for each property you would set up a class. You would set up a class in QuickBooks, which would let you track each one of the properties or each one of the LLCs within just one QuickBooks instead of you buying a separate QuickBooks for each property because freaking can be very expensive, right? So like right now, like the last time I checked, QuickBooks Online Plus was like $115 per month. I know that like during September, QuickBooks had like a $35 discount for like the first 4 months or something like that. And then now that we're gonna go into Black Friday, Cyber Monday, I'm willing to bet that Intuit is gonna have an even more attractive sale on those QuickBooks in the next couple of days. But what I would say is that if you were a bookkeeping client of ours, you got this QuickBooks subscription fee would be a part of your fee that you guys are paying us. So then you wouldn't have to worry about your guys' QuickBooks subscription, please.
Oh, great. Well, thank you so much for that.
Yeah. Any other questions, Clark?
Nothing from us.
All right.
Yeah.
Good meeting you, Carmen. Thank you for that. That was a great question. So let's go on here. So here is my QR code. So if you guys want to connect, reach out, please hit that code and yeah, schedule a call with our team. And I look forward to us connecting. All right, you guys. Happy Thanksgiving to everybody who's watching, and I look forward to us connecting. All right. Thank you.
Happy Thanksgiving. Take care.
You.
Thank you.
Bye.